Good afternoon, everybody. This is Jeff Scott. It's August 18th, Sunday, August 18th, 2013 at 12:38 p.m., a few hours before futures open, so all of my analysis will be based upon end of day on Friday. Hope you all had a great week. It was certainly a challenging week in the market, as I will show you for me. Top-down investing is what I do, and I call today Market at a Crossroads, and there's my email address, jeffrey@highgrowthstock.com. As always, my quick disclaimer, educational purposes only. Anything I talk about buying or selling is in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm not affiliated with any brokerage houses or investment companies, and I'm also not affiliated with any software vendors. Anything that I use is a tool that I paid for, and I do the same analysis online as I do as a routine for myself. Coming up shortly will be the annual, or the twice-a-year meeting that we do in Palos Verdes, led by Ian Woodward and Ron Brown. I recommend this highly. There's only a few seats left for this month's meeting, or this year's second meeting, rather. And we're not sure there'll be another meeting next year. October 26th through 28th, lovely area, Palos Verdes Estates, in their library, $12.75, and you'll be fed and watered while you're there, except for Saturday dinner, which we go out as a group dinner on our own. And the only thing that you'll be disappointed be is how tired you are at night, although that's not a disappointment. You'll get to sleep, because you really, well, it's an intense meeting where you will learn a lot, network a lot, and want to come back again if they do it again. Let's see. Last week I called it a market in transition. I saw divergences, weakening internals, Hindenburg Omens, rotation to more defensive stocks with bad seasonals, and said the market was climbing a wall of fear. This week, I think it's sort of the shootout of the OK corral, and whether or not we hold its support or we fall off of a cliff. I'm not sure we have to fall off a cliff, but I think there's certainly room for some further correction. Agenda today, I want this to be probably about 45 minutes, which gives me until about 1:30 before I want to stop, and I'll do a top-down look at the market, including review of last week, and then bottoms-up shortcuts. The website is basically, if you've not been there, I'm going to take you there for a real quick trip. Highly recommend the software tool, and basically what it says right here, a free 30-day trial. You'll get many of these in the marketplace. He doesn't even ask you for your credit card. Now, a couple things, whether you're a newbie or not, go under support to add-ons, and you're going to see that Ron Brown has updated new chart views, which I'm going to use tonight, and filters, as well as user groups. It should be funny if you change the user groups much, because I haven't looked at them yet, but I did install them. And you basically run both of those execs, start the program, and everything is done for you. If you are new, don't spend some time up here. You'll find in the Learning Center a series of webinars and training videos by a lot of different people that can help you get started. And these training videos go over, I think these are done by George, specifically the various buttons that you see on the menu when you start. Ian Woodward has an outstanding blog, which he updates usually. I bet we'll get one tonight. He updates them more frequently when the market's in entropy, and I think the market's in entropy. Also, under investment strategies, you'll find my name, and it will be a number of different things that I've posted. I just want to point out, if I'm blowing you away with my words and you don't know the terms I'm using, just go to HGSI Stock Doc Part 1 of 3 from last week, and it's all about the basics of HGSI investing, what we look for, and includes a downloadable PDF, which will be the presentation I spent a lot of time with going over what we do in the program. If for some reason you're afraid of the HGSI site, you can get the same thing without the PDF on YouTube, just for Jeffrey Scott or HGSI Stock Doc. You can see I have a number of things posted there as well. All right. So without too much further ado, let's go and jump into the program. It's always important for me to understand where this market is. And so I like to look at TradeStation very quickly with the elder indicators, specifically his impulse indicator. And we talk about all the time, it can be red, which allows you to sell or hold, green, which is a buy or hold, and blue, which really doctor's choice in my case. And Alexander Elder is a doctor as well, so I think that's apropos. When a market bottoms, the red will turn to blue. When the market tops, the green will turn to blue and ultimately to red. So if we look at the NASDAQ, we see a couple different things. We see that we got, and I'm not great at drawing on this, so I will do the best I can. We had higher highs in price and not in MACD. So when I said I saw divergences, that's what I was talking about. So higher price, not MACD, and that pretends bad for the market, and it showed us the top in advance. Now, to be fair, we saw divergences for a while before we actually rolled over. But basically green to blue to red. The NASDAQ on the daily is in red. The weekly is blue, still green on the monthly, but definitely a change in character and pulling back. The target might be the elder acceleration, or the elder bands that you see right there. If I look at anything else, the Dow and the S&P 500 actually look weaker, which is obviously not a good thing. I've got so many things on, it takes a little bit longer to do these screen writes than normal. But you can see the Dow has knifed all the way down below the lower band, the elder band, so that might be setting up a good place for us to see it reverse. And I'm not going to spend the time to look at the S&P 500. It's right above the lower band, also red. And the weeklies turning red on the S&P as well as the Dow, and blue on the monthlies. So the market certainly is not looking healthy, and those MACD divergences sort of told us or predicted that we'd see a pullback. Another way is to actually look at performance. Not a very happy week. For those who haven't been here before, there's a tool called Group Performance Analysis that allows you to set a lot of parameters in HGSI. I scan Friday to Friday, and I do my analysis over the weekend. So these are the things that showed up in these various searches on last Friday night and Saturday that I measured. Every group is considered static. My portfolio is not static. I did a lot of selling in the beginning of the week, as I mentioned on the webinars, because of the Hindis. And I took some protection buying some TZA and some S&P 500 ultra shorts, which did okay. The TZA did better. So these only represent an ignored portfolio, but they give me a great feeling of what the market is doing. As we can see, Bible gap ups had a little bit of a positivity of 0.12, but really there's nothing here. All the red ones are negative. The S&P 500 was down over 2%, and not shockingly, my unmanaged portfolio, which is not how I do my portfolio, would have been down 2.6, which, believe it or not, was actually better than the IBD 50 and the HGS 100, which were down about 2.8. Nothing can be said much here except for the fact that things are all red. Now, when I did my live webinar, and I'm going to digress for a second, one of the things that I talked about was that one of my favorite ways of doing bottoms-up investing is to take all securities and then find, and I'm going to go into the new add-ons. Actually, I don't want the filter. I want to go into view and go up into HGSI strategies. These are the revision for 815. Go down to Woodward and Brown Archive. Go down to reference group and miscellaneous, and that by sticking sprinters one step with Bongo, I'm going to identify some good stocks. So by definition, this is why these are good stocks. I mean, there's a reason why they're here. Ghilardi helped to find these, so he's recognized there. They have relative strength of 80 or higher, group rank of 80, and EPS rank of 60. So we're allowing them to be turnaround stocks from an earnings per share, but those are all high numbers. They're an accumulation of B, and their Bongo daily has to be yes. So that means that they're not, frankly, they may not be in a long uptrend because that's just a very short thing, but they're not in a downtrend, or they didn't drop today versus yesterday, most likely. And what we found was that we found some good stocks. And then what I did with this is I made a group from list, and I'm sort of jumping around. This is what I planned on doing at the end, but we can make a group from that list, and we'll call it today's. We're going to call it Sprinter 818. And then in that list, someone said on the webinar, can I find those stocks that are pulling back? And we decided we'd go look at elder rules, and that first rule is buy when the 2-day turns negative during uptrends. So that's a pullback. And these were the stocks that it identified today that are in uptrends that are pulling back. Now, these are stocks that are pretty much extended, but all of them are showing that nice pattern of pulling back. And so if you wanted to look for great stocks and pullbacks, you can find them by using the sprinters and then applying that combo. So why did I say all that? Well, I left the Sprinter Bongo filter on, and I reran the same group performance analysis. So what this means here is that we only looked at stocks that passed the Sprinter filter, and we did the same group performance. So each of these groups represents a group that I track on a regular basis. And most of them, frankly, represent very bullish groups, such as the Market Smith 250 growth that was down 2.29%. The Market Smith top-rated IPOs was down 2.33. Top vector best stocks ranked by VST, 100 stocks, were down 2.54%. So these are great stocks. Where is the looking for the GIF? I'm sure it's right in front of me. Here's the best of Woodward and Brown. They outperformed, although they're still down 1.53. So there's a lot of different things, and the GIF All-Stars were the best stocks the prior week. So the leaders got clobbered this past week. That's what this tells me, because all those leaders groups did worse than the S&P 500. Well, what would happen if I ran all these groups, but I filtered the stocks and only looked at the stocks that passed that Sprinter combo? Here's what I found. You notice we see lots of black and just a little bit of red. So the small number of stocks that passed that Sprinter combo, so it's filtering positive lists with a very positive, here it is, Sprinter one step with Bongo, shows you a whole different story. The S&P 500 was down 2.1. But now look at what happens. The two stocks from the IBD 50, that's probably very small numbers, were up 5%. The HGS 100, 5%. If you look at top RS, up 20%. Best of Woodward and Brown, only one of them passed the filter, was up 8.78. So the problem is there's very small numbers. Sprinters here, and this one adds the Bongo, up 4.34%. I guess the point is that rather than just apply the Sprinter filter to the whole market, or the Sprinter one step with Bongo, that at least this week, and I'm going to go out and retest it now going back, applying that filter to all the lists maybe brings the best of the best to the top. So it might be a way of taking what was a very bad week of market performance, where most groups did very poorly. And let's look at MarketSmith from 2.29. And then after we apply this, MarketSmith is up 2.05, so almost a 4.5% change. So food for thought, maybe I ought to be taking my bottom line list of the best stocks every day and then applying the Sprinter Bongo filter to it, because the performance still has me scratching my head, which is why I'm even talking about it. Bucketology, here's where we were last week. I talked about 50-50 can go either way. Talked about this looking like football goalposts. And I talked about I'm looking for it to move to the left or the right, and when I start to see 30% on less than or 30% greater than the end, then I'm going to know that we're getting to a point of excess. Well, here we are a week later, 75-25, so totally in the bearish camp, and over 22% of the stocks are below the lower Bollinger Band. Since stocks maintain within the upper and lower Bollinger Band 95% of the time, and they only spend 5% of the time above or below, if 20% plus of the stocks are below, the tendency eventually is going to be for them to come back in. It's when that happens that we'll see the market perhaps start to rebound. Now, I think this market is interesting, and we'll look at specifically the amount of pullbacks, but it's been more damage underneath the surface with massive rotation of some of the bottom stuff, the Cleveland Resources and Walter Energy and gold, and pullbacks of some of the leaders in this market. Indies, talked about these a lot over the last couple of weeks. I think the point is, and I put out a little note of which I had one positive comment. My note said, we can argue about what the definition of a Hindi is, and we can also argue about the components of the NYSE that should be measured. There's a lot of preferred stocks, warrants, and weirdness in the NYSE and if we look at the bar chart version versus the HGSI older version, which we still have of the all NYSE, you get different findings as far as the Hindis. As far as I'm concerned, we went a long time, in fact, I'm just actually looking at the Hindis alone. So we had 5 Hindis or 4 Hindis in the last 10 days. That's a lot of Hindis, and that might signify high risk of a top. We had a couple in May. Here's one in April. All I'm saying is that I've got to go back a long way till I start to see a collection of Hindenburg Omens. And so whether or not how we're looking at the Hindi today is the right way or the wrong way, what the components should be looked at or shouldn't be looked at, whatever they might be, when I see this pattern, when I haven't seen this in years, I have to take notice. And I think the rest of the market has as well. So without further ado, let's open up HGSI and let's start to look at the market. So I'm going to go into Ian and Ron's groups. I'm going to start with my top-down analysis, go down to user groups. And the first thing I notice, I want to make sure I sort on raw combo, no shocker, gold, silver, oil, commodities led for the week. Small caps got hammered. A lot of what we do are small cap like stocks. Utilities did poorly, interest rates going up. Treasury bonds did poorly, interest rates going up. And here's most of the indices we look at. So it was a tough week in the market. Let's take another look at the S&P 500, this time using HGSI. I repeat a similar analysis on a regular basis, and I do it because I find it useful for me. I hope you all find it useful as well. And I like to look at performance. Now, I'm playing around with my view a little bit, And I actually put the Hindenburg Omen view into my chart. So I wanted to show you something on this. Is you now have a choice, or will have when the upgrade comes out, of picking the source. So there's no bugs in this. It works fine. It works great. The only fly in the ointment is which source you use, and then there are going to be different definitions. This program actually gives you great flexibility as well. So I'm playing with this in my view just to give me another sense of the market. And this tells me the market's, toppy. No shocker, everybody on this call knows that the market is toppy. So I like to look at things different ways. So I like to measure. So from top of the market in September to bottom of the market in middle of November, 8.7 fall over 43 days. If all you did was buy an index on the S&P 500, and you woke up today, you'd be up 23% in 187 days, and you'd be pretty happy because that's a major return. Now, if you were really a good market timer and you sold at the top of the market, you'd feel even happier. You'd be up 27.5%. So despite all the negativity in the market, since this low, we are up 27% to the high and over 22% to the close. During this market, as I always show you, we've had a series of modest pullbacks. Here's one that was 3.5, give or take. Here's one that was 3.1. Here's one that briefly undercut but closed on about the 50, 3.8. Here was the big one, which was about 7.5, 7.7 for that one. So we've had a series of small pullbacks, but despite that, the high, most recent high, higher high was up 27%, and where we closed, we're up 22. So this has been a fantastic run in the market. The high jump has come off the top, so I don't have that pressure there anymore. My momentum indicators are turning red, and we had kahunas on the index this week, which is not a good sign. Now, if I want to open this up a little bit more, tighten it up a little bit more, I can see, and this is why I called it a crossroads. We ended up closing on the 50. So as we talked about, from the high to where we closed, right below the 50 days moving average, we are down I thought we're down a little more than that. Let's try that again. All I'm doing is drawing a trend line from the top to the close-ish, 3.2% in 10 days. That is totally consistent with what we've seen this year, where we get quick pullbacks of about 3%, 3.5%, and then a bounce. So the bulls will be able to argue that we're going to, from here, we're going to bounce and go up. And I'm a bull by normally, just not sure I'm believing that that's the most likely. So from here, we travel down to where that 200-day may be. That's another 5.8% return or drop. If I go from the top of the market down to that point, I'm looking at about 9%, depending on where I want to drop it. So my guess is that three things can happen here. The happy bull is we get a bounce and we go from here. That would be okay. I don't think it's the most likely, but that would be okay. Why do I think it's not the most likely? Volume's light, lots of volatility, a lot of negative entropy in the market around easing. We can go sideways here, maybe a Darvis box in between the 17 and the 50. That could happen. That would not be unhealthy. Or we pull back for a 9% total correction down to the 200, and then hopefully we bounce from there into year end. Now, if I was a betting person And as the way I've set my portfolio, I'm going with scenario C, although I hope we get the bounce tomorrow or a sort of a sideways movement. So that's how I look at the market: high, medium, middle, and a low road scenario, as I learned from Ian. If we don't hold at that 200-day moving average, then it gets really ugly. And my hope would be that we hold there. So that's my thoughts on the market. The last time we got close to the 200-day moving average was in November and January. This has been a huge move, retracing much of that move and then running out the rest of the year. From that point, to me, perhaps the most likely phenomenon. I'm not going to spend much time because they all look the same. Just look at the S&P 1500. I like to look at this because it is a combination small and large, and it's exactly what you see sitting on the 50-day moving average. The NASDAQ, which has been stronger, more smaller stocks, not quite down to the 50. If I said 200 last time, I meant the 50 on the S&P 1500. So NASDAQ above the 50s, a little bit stronger. We look at gold, silver, talk about rotation to junk off the bottom, pull back, still below the 200, got above the 50, a number of kahunas, pocket pivots, DI crossover, everything is green. I'd be all over that if it was a stock. I think there's potentially more room to run for gold, and I'll set my targets kind of this 144 by the time we get there should be filling a gap from back here, and by that time the 200-day moving average will come down there. So that's my target. I bought Nugget last week and some American Barracks. Put my money where my mouth is. Silver, percentage-wise, a bigger move. Same type of a story. My target here going to be around a little bit above 25. You still got another 10% plus move left in silver. Story's the same, lots of pocket pivots. Did have a red candle high on a gap up day on Monday, on Friday rather. I'm really not sure what to make of it. Remember, Friday was also options expiration. I like to look at the dollar. The dollar looks to me like it's putting in a bottom, and a rising dollar here would not be great for stocks. On the other hand, I thought we put a bottom in before and it continued to drop, but the dollar's clearly at a place that has held in the past. Volatility moved up and stopped at its confluence of the 50 and the 200-day moving average on Friday. I look for volatility. It either breaks above this and it becomes meaningful, or the more likely scenario is it tracks back down to the 12.5 range, where it seems to have done that in the past. I want to look at some internals on the market. Started doing that last week. I thought it was useful. Go up here. Let's see if we can find some eye charts. Just look at a couple and make the point. So you could see forced indexes on the S&P 1500 have gone negative, as has the Bongo daily, so clearly pulling back towards support. You also had a DI crossover with the negatives coming on top this week. We look at new highs, new lows. Remember, green is good, red is bad. We got to the point here where the new lows to get a pink line, the number of new highs to new lows had to cross below zero, and that's what's happening here. Not sure why they repeat this. I'll have to ask Ron. All right. So the new highs are now less than the new lows, and you could see this. Pink there as well. You can see the trend of that turn down as well. All right, what else can we look at? You can see that the E's have come through the A's, the accumulation distribution, which is bad, and you can see that the C's and the D's and the E's are pointing up, the A's are almost gone, and the B's are falling. So accumulation distribution deteriorating. We had one of these red bars where to get this you need to have advances decliners 1 to 5, so you had a 5 to 1 advantage to decliners. Looks like that was on Thursday. Very bearish finding. I don't know if we had a 10 to 1. We had a 10 to 1 on the advanced declining issues, but not on the volume. 1 advance for every 10 decliners. Shows you the weakness of the market internals. If you look at the number of, in the index, the S&P 1500, the percentage of stocks trading above its respective moving averages, everything except for those above the 200 have dropped below, a sign of bearishness, as we talked about last week. So we see throughout the S&P 1500 on the internals worsening internals with the market weakness. So I'm bearish. It could take a lot for me to go long this week. My 146 groups, we see only 10 of the groups are positive. To the downside, we have only 3 groups that are downside. So by force. So what's really happening here is some of the really weak ones, such as home builders, gold, and minerals have moved to the top, and some of the strong ones moved to the bottom, and the strong ones being fertilizers, down, power, department stores. I'm surprised that I have so few here. Let's make sure I don't have anything wrong on. Nope, that looks right to me. All right, because I know they're all here, because when I look at top down, the vast majority of them. So let's just take a look at the winners. This is the smallest number we've had in a long time. Now I can tell you, in periods historically for me of market bounces, I've found the least number of groups and stocks that met my filters and my scans. I'm at pretty historical lows for a number of weekly daily bongos, sprinters, and as you can see here, forced index up groups. So perhaps that's giving us evidence that a bounce is coming. We'll see. Home builders. You look at their performance over 5 days, and the leader was Beazer Homes. You look over the last 1 day, Beazer was up 5.3, M&I 3.0, Pulte 2.3, Lennar 1.8. So in a weak tape, home builders have been leaders. So let's look at the first couple, which are the standbys. Let me go down to a chart that actually looks like the chart I use for this. All right, so put my earnings up. Real quick for newbies. Here's the last 8 quarters. Here's the next 2 quarters. Here's these 10 quarters mapped out of earnings and revenue. Note to George, if you're listening, can we get more of these reported? I think bar chart can give you that data. Another note to George, is it possible on this screen here to have the earnings per share next date listed, although I know it's only as good as the source. All right, down here I've got my Hindenburg Omens. You can see they flew last week. I have the weekly bongo, the daily bongo. So in a downtrend, and these have been in a downtrend, the weekly bongo and the weekly force will be red. It takes a while for the bongo to turn weekly, but you can see the daily one is already turned to green. Accumulation distribution has gone from an E to a D, pretty bad, and the force has turned positive. You had a green candle low on Thursday. DI crossover coming, pocket pivots on Thursday and Friday. So the problem with buying stocks after they've been hammered is, and you've got earnings, downtrend, bullish engulfing pattern, here gapped up a little bit on Friday. You got a lot of overhead supply. You got the 50 and the 200 to get through, but that's still about 15% to 20% move. So you could consider these. They're below the 200. Still in a downtrend. As I said, market rotation, junk off the bottom. Here's Lennar, downtrend. It's got to get through that 50 and then through the 200. The same story, maybe at best 20% move in these, which is not insignificant. Until it gets above the 200, it's a downtrend. The DI did cross over. The shorter bongo green, still long on the weekly bongo. DH Horton, another, picture is the same. Deep pullbacks, trying to mount a comeback. When this is your best ranking group, it tells you what the market's doing. If I look at the next one down, so I right-click, back, get to gold, right-click on gold, change to index group. You can see some of the leaders in gold. Let's take a look at the couple. I think you're going to find similar patterns, and the problem is, and I showed it last week on Cleveland Cliffs, which turned out to be accurate, is these 200-day moving averages can be fairly tough to get through. And that's where we're up against on a lot of these stocks. So gold core, nice move off the bottom, has to get through that 200. New gold, not quite to the 200. Same type of a move though. Rand gold, getting close to that 200. As I mentioned, I've got some American barracks. A little ways to go, but it's going to have to show me it can stay above the 50 and get above the 200. Now, a way to magnify the effect is to buy the 3X's, and this is Nugget, which is the Direction 3X on gold, and you can see it hasn't moved a whole lot numerically. By charts. But it has moved quite a bit numerically. In fact, if we look at the close at 9.2 and you go back, you got so it's down here, you had a 9.8 close. Before that, it was at 8.3. Before that, it was at 7.2. And it was at 6.7 about 9 days ago, or about 6 trading days. So that's a pretty big move from 6.7 to where it closed at 9.3. It's a 6.7 plus 2.6. So that's almost a 40% move in gold in Nugget over the past week. Now, obviously, Nugget being at 3X really magnifies the move. So gold, if you believe in it, it looks like a place to potentially be. Precious metals going to be some of the silver stocks. So silver Wheaton, I think we actually looked at this one last week. Downtrend like some of the others, which means it's got the same issue, which is it's going to have to prove it can get above that 200-day moving average. So silver Wheaton looks nice, at least until we see what happens there. Endeavor, silver, AEXK, same story, got to get above the 200. There's the index. Research and consulting. I don't know if I get this group. I thought, well, we'll see what Solar City it says. So here's Zillow, and I think Zillow's in the real estate world, if I'm correct. Real estate information marketplace. And I just bought 2 condos, and I didn't even look at Zillow. I wonder what I missed. And Zillow's one of those stocks, pulled back a little bit to that 8-day exponential moving average. certainly in an uptrend, kind of bumping its head on the high jump bar. Daily Bongo red because of the pullback, which it looks like it's coming out of. I mean, if the market's strong, the stock goes higher. Nothing bad looking about this stock except it doesn't make any money, which bothers me. Solar City, I guess it does design and consulting as much as manufacturing. This is Elon Musk's other company. In Solar City, I don't like as much. It's below the moving averages. I'd like to see it get above that. It's a new stock. It doesn't have a 200-day moving average yet. There's the index. Nothing too exciting there. I guess that's all about Zillow. Oil and Gas Exploration Index. Anadarko Pete, I saw that one looked pretty good. I looked at earlier. It pulled back to the 50, had a pocket pivot and a kahuna on a DI crossover on Friday. Everything turns green. If you're not in this space, it's not a cheap stock, but it certainly looks like it's a leader. And I thought I saw something this week. Berry is one that looked interesting from a chart perspective, from a low-risk entry phenomenon, bouncing around its 200, sort of going to squeeze in between these, and then it's going to break one way or the other. Pocket pivot and kahuna starting to turn over on the green with a DI crossover potentially on Monday. Might be a way to play strength in oil. Because you know you stick your thing not much below where this bar is. Put your stop there. Here's one that I thought was interesting. Fairly robust earnings per share growth. Trades at a multiple that's higher than the industry, but much more than the earnings per share growth. Pulling back 8.17. DI crossover looks like it wants to run. Great earnings. That's SM Energy. Building products. I like Expedia, but let's see what we got here with Lennox and Trex. Not Expedia, EXP, which is the cement maker. So here is Lennox pulling back to the 50. I would like to see something come in here, kahuna, a pocket pivot, a Bible gap up, tell me it's going to actually bounce. But you can see this 50-day blue has been a great place to get into the stock this whole way up. It has earnings per share growth coming into the stock, and they're involved in the air conditioning and heating that goes into the home building. Here's Trex. They make the outdoor stuff for your really nice decks. And you can see, unlike Lennox, it's in a pretty robust pullback. I'd have to see it get above the 200 before I get interesting. A lot of people were talking about this as a short. Not sure where this guy is, but I like EXP a lot. Eagle Material, and it's setting up on its 200-day moving average. I mean, I guess what you could do is draw two lines, and I'd probably draw them a lot closer to each other to this price, but we kill that. That did not come out the way I wanted it to come out. But I might draw a line at where the 200 is, or the 50-day is, and maybe underneath. Stock closed at about 66. My guess is a break above. It goes out to new highs if the market has strength. And a break below the 50, it's something that I like to short, or below the 200 from a squeeze area might be shortable. The earnings look really good. It'd be interesting to see which way this stock goes. But it's at a place, for me, a natural buy point, still an uptrend pullback, sitting on that 200-day moving average. Home entertainment software, these are the gaming companies. They've been incredibly strong. I'd have to go back in history and look, but I wonder if we don't see these things pop when the console makers come out with new ones. and I think we got new PlayStations and Xboxes on the way, plus the Christmas season. Electronic Arts in a very bullish move, considering what the rest of the market is doing right now. Not much in earnings, a turnaround play with a lot of earnings coming in the Christmas season. A couple of pocket pivots, high jump high, but not highest. Lower left, upper right. Rosetta Stone, I'm not as interested. It's pulling back, but it's sort of in a downtrend now. Then we get to the index. What else we got here? Life and health insurance. I can tell you all of these were in downtrends, and you could see the two-day force just switched over in all of these stocks. So these all just had a nice day on Friday, enough to switch their two-day force over. So what do you see are a lot of these, a lot of pullbacks to the 17-day here in a run that's Lincoln National. Certainly a lower left, upper right. Be nice to get it at the 50. It's a little bit extended there. Prudential, pull back closer to the 50. Not as pretty a chart as the last one. I think we looked at PFG last week as a potential pullback. Close engulfing on Friday. I might want to watch that one and see if it takes off. I love the leader, which was Lincoln National from a chart perspective. Aluminum index. Now, who would think that you'd see any of the aluminum companies here? I tell you, this is junk off the bottom, had a good week, and the good stocks got killed. I mean, how do you get excited about that stock? It's sideways. I guess it's above the 17, above the 50, above the 200. Had some kahunas in the pocket pivot there. I can't buy this stock. Boring. I'm sure this is boring too. And then lastly, railroads. Again, also just turned positive on the 2. 13s are red, so they're in downtrends by definition. So again, more junk off the bottom, moving. So it's going sideways, trying to get above the 50-day moving average, mostly red above. I don't find these real attractive or real sexy, but here's below the 50, struggling to get back above the 50. So I think it's pretty clear the stuff that's up here at the top by two-day force are those groups that were beaten up, that had a good couple of days. Now, I'm just looking at what's on the bottom side. Not a whole lot here. There's been a lot of retail questions, and I guess none of the stocks made it, even though the index made it. That's strange. Now, what's not there? Let's go to the, actually, let me go back to top-down view. So these are things that have been doing well, but had a bad couple of days that they didn't make it up. But biochemistry, where is biochem? It's pretty far down, I guess, although I probably could have missed it by now. I mean, the point is the things that were working, such as biotech and pharma, are way out of kilter. If I look at biochemistry, biotech, and I look at by raw combo, the usual suspects aren't here. These are all very small companies, most of which don't have products on the market. Some of the better ones that we've been watching, the cell genes, let's just take a quick look at some of these stocks. I do like the pattern on Ligand. Ligand's an interesting company, and less of a marketing company, more owns licenses and gets royalties. So here's that pattern I like. Uptrend, pull back to the 50-day moving average and a bounce. I'm going to look for this to have a kahuna or a pocket pivot, viable gap up to run again, but I find that to be interesting. So if we look at some of the old standbys, Amgen has stuck a do I buy or not buy Onyx, sort of pulling back. not that impressively. Celgene ran up to almost 150, which is where my calls were, and then it came right back down to that 130-ish where my puts were, and it looks like it wants to live in this range. It's closed below the gap-up day, or about the low of the gap-up day, when it announced some positive data that they hope will drive approval of Revlimid in the EU, but certainly no current leadership coming out of that. I guess one of the big stars of late here has been Biogen IDEC. Pull back even below the 50. One of my favorites going forward, as I mentioned several times, is Gilead. You can see Gilead potentially giving us a great buy point with the doji sitting right here on the 50. If we have any strength in the market and Gilead opens up on Monday, I'm probably buying. If I go and look at big pharma, some of the things that I've been looking at, some of the things I know I own and some of you own, Santeris. Lower left, upper right, just in a little bit of funk here. We'll see what it does here. Great earnings per share growth. I think this one clearly goes higher. Valiant, a Canadian big acquisition company, keeps buying smaller companies. It's extended, but lower left, upper right, still a beautiful chart. I think it has room to run. Jazz. Jazz has a lot of things going for it. It still has some earnings per share growth, unlike most of other big pharma. It's also located in Ireland, which has favorable taxes, which makes it an acquisition candidate. It's a big stock price, but it's only a market cap of less than $5 billion. And we're seeing companies get bought both for their existing product line, which doesn't get a whole lot of respect from the Wall Street with that market cap, but also because of the Irish tax characteristics. How about J&J? You want to buy a pullback to the major moving average? Here's a pullback to the 50 on a stock that pays a 3% dividend. Had a green candle low on Friday. If this thing holds here and moves up, what a great buy point on J&J. Not beautiful charts, which is why they fell off the list. So not a real happy market for the longs, and with the market in a funk, it's hard to find things that I want to be buying. I tried to identify some of my favorites. I showed you in the beginning one way to make your life easier. I'm just going to review it now. Is hit the warehouse view. Start with filters all off. So we start with 7,832 securities. If you got 5 minutes, and I've only got a few minutes left, and you want to make your life easy, just go in here, go under Strategies, Woodward & Brown, Archive, Reference, Miscellaneous, Sprinter One Step with Bongo. You're now down to 28 stocks, and I'm going to look at the first 5 or 10 very quickly, and I bet on a bottoms-up approach that we're going to find some attractive stocks. Now, these may not be in the strongest groups, so we haven't seen them yet from a top down. Ranked by raw combo, yep. So I've been very bullish on AXL. IBD this week talked about the automobile manufacturers at 80 hours plus a week in operating, most operating hours in decades. Magna International is one of the companies that creates parts for the new cars, mostly North American and European OEMs. So they are a supplier, and you can see lower left, upper right. Visteon is another supplier in a little bit of a pullback, but a great move there. Manitech, don't know what these guys are. These are consumer staples, personal products. I hate network marketings like Herbalife. This must be in the same category, but doesn't seem to have any earnings here, but something happened on Friday with a big move up, a kahuna in volume, probably worth investigating. If you want a gambling stock, this one makes money, has actually earnings per share growth is in an upswing, lower left, upper right. This one eliminates a lot of the Vegas risk as this is a Macau play. And Macau has been extremely strong, as is MPEL. Century Casinos, don't know anything about them. It's too cheap for me to buy, but I love the pattern. Pull back to the 50. Big move up here, percentage-wise. Cheap stock, got earnings per share. Maybe it's just early. National Technical Systems, don't know this company at all as well. Nice little saucer bottom here, 2 kahunas in a couple of days, huge volume, gapped up here. This looks like a takeover. I don't know. I'd have to do research. So we do right-click, info from web. Look at FinViz. What does FinViz tell me about this company? Aurora buying National Technology Systems. All right, well, that explains that. Web, this is one we looked at early on in a big uptrend. We've looked at this a couple of times. It's got earnings per share, lower left, upper right-hand corner. Don't know XOXO from Adam. Don't like the earnings per share stumbling. It is a non-store retailers. Wedding advice for, oh, it was the knot. Okay, I get it now. So sort of a cup, a handle, breakout, 4 positive kahunas in the last 10 days, everything green, makes money, maybe something to look at. So the sprinters on top of all securities give you all much better looking charts than we did, frankly, from the bottoms up, or from the top down, rather. The other thing to do, and we'll do it very quickly today and then say goodbye, is that group inclusion filter. And let's just look at 10 stocks I find with that, and then we'll say goodnight. So we're going to go into the designer and go open up the group inclusion report. Clear all. Go into smart groups. Start with M and Ks, get the Bible gap ups, the pocket pivots, go down to W and Bs, like best criteria, ERG, growth, HGS leaders, QEPs, stocks and groups moving to the upside, and 52-week highs. Make report, web, gem, 8.18.13. We want to look at 10. What it's going to do is going to look at all those lists and find which stocks are in the most lists. If all those lists are the strongest stocks of the week, then if I show up there a lot, then I must be a good stock to look at. What do we find? These are the stocks that made it to the best of the best. Now we can go in and very quickly, let's look at these before we say goodnight. So we want to go into, first I want to get to my scorecard no index view. I don't want to, I'll take the printer out. And I'm going to user groups, web gems. Here's the 10. Just very quickly, these are the stocks that made it to the good groups that I identified the most times, ranked by raw combo. We already looked at Santoris as a pharma stock, lower left, upper right, clearly a leader in a bit of a pullback, good earnings per share growth. We just looked at Webcom. Yandex, the Russian Google, lower left, upper right-hand corner, a little bit loose. Don't know how much to trust Russian stocks, but certainly a leader. NIC, which was the e-governor, electronic components. Several people talked about this industry as being leaders if there's a worldwide industrial recovery. Someone must think there is. Saw the kahunas here predicting, then a big move up. So we have a flag pull, a flag looking for a breakout to the upside. Investment. You know, I don't know anything about this company, but when I did my big review, a lot of these companies that provide information to financial advisors were showing up in my stocks. I love this chart. It makes money, revenue growth, lower left, upper right, pull back to the 50, still hasn't taken off again. I think this stock looks very viable here, close to the 50 with earnings pullback. Lumber liquidators, this has been a leader in the market. It's a derivative of housing. They make the lumber. Had great earnings at a high. Again, all these are at higher risk now because the home building industry is a little bit more questionable. But pocket pivot on Friday, a leader. Here's a loose fiber play, a young play, had a bunch of viable gap ups days, at least by definition. Pulled back hard to the 50, announced a 2-for-1 split, interestingly, on Friday, and traded up another dollar after hours. Might be interesting to see where this one goes. High growth stock, great earnings per share growth. I actually bought some of this on the pullback. NSM, I talked about OCN last week. NSM and WAC are all in the same category. These are mortgage servicers. They make money by buying up poorly performing loans from the big banks and then servicing them. As the economy has recovered, the bad debt has been less of a problem, and all three of these companies have done well. And look at their earnings per share growth. The next one here is Aspen Technology. Don't know anything about this company. It's been around for a long time. It had a viable, well, I mean, this kind of cluttered there, isn't it? Friday, it must have had earnings because it had a kahuna, a viable gap up, DI crossover, everything turned green. I love the pattern. It was basing, squeezing with the moving averages, and it popped. I'd like to know more about it, but it might be something that I might want to consider playing that viable gap up. Makes money with earnings per share growth. Didn't make money for a long time. Taser, the old favorite there, pulled back to the 200, had a kahuna off the 200, and now running, do your research, everything's turning green. Looks interesting. This is a stock that has been around a long time, and it has a rather storied and checkered past, but maybe it's different this time. Don't you love that statement? That's it, just to show you OCN, which I still like. Like Walter's Asset and like NSM, starting looks to me like it wants to move again. Had a pullback to the 17-day and a big day on Friday. Great earnings per share growth. Last, though, just take a look at the things that I identified on my buy list for today and see if there's anything to talk about. Internet software, I had a lot of them on my list, and clearly a leader. See, investment, we looked at Centeris, AFOP. Noah Holdings is sort of an investment bank in China. It's had a great run. I'm long it right now. It's got earnings, I think it's either the end of this week or next week. It had a nice run up there, pulled back. Looks like it wants to run again. I remind everybody of Chinese stocks and earnings by putting up VIPS, which I was in. I got stopped out, and then the next day earnings came out and the stock just died. I got stopped out on the $45 day, and I was pissed off, and then the earnings came out the next day, and I was like, phew. So even these huge earnings per share numbers, if they miss the projection, even though they have a big number, the stock gets killed. There's NSM, there's Ligand. We actually have looked at most of these. We'll look at American Axle and then Activist, and I'll say goodnight. I'm still very bullish on American Axle. I'm bullish for a number of reasons. You know, it's needs to wake up a little bit. It's pulling back a bit. I don't need that much of it. But the reason why I like this is because this stock has great earnings per share growth. It's had a nice run. It's still a relatively cheap company at $1.5 billion. I think it's an acquisition candidate. But it's had great earnings per share growth. Look what's coming into the stock. And then the other one on this list I wanted to point out to you was Activist, which is the old Watson Pharmaceuticals. I talked about a couple weeks ago how I loved the pattern that it was going sideways into sort of squeeze here where the 200-day moving average came together with the 17 or the 50, the 17, the 8, and it moved above it. I think this company wants to run. It's certainly a leader in the generic industry. They just closed on their Warner-Chilcott acquisition. And then lastly, Express Scripts, which I think is going to be pulled back to the 50-day moving average. It's been a good place to buy in the past, and we'll see if it can hold there. On that note, you all have a great week. I am clearly not a hyperbole this week. I'm hoping for, wanting, asking for, hope to see a bounce, but that doesn't mean we're going to get a bounce. All I know is that when I look at what the market is doing right now, let's just put up that S&P 500 as we say good night. Is that we're sitting here on an area of potential natural support. We can bounce and to go to new highs. Gosh, with those Hindenburgs, that would be nice. I don't think that's what's going to happen. We can go sideways and get a heel. That would be outstanding. Or we drop down quickly to that 200-day moving average and hopefully we bounce. I'm going to put my bet there, but it doesn't matter what I bet. I'm going to see what the market tells me. I think you got to temper your bullish tone right now. Do money management, protect your stops, don't give up your nest egg. Live to fight again and be prepared to pounce on a bounce if we get one. Y'all have a great week, and